Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 4:30 in New York. It is Thursday, 3rd day of August, 2017, and this is the Daily Report for Gold and Silver. Now, for the second consecutive day, we do have lower precious metals pricing, with gold trading off and closing off about $4 on the day. Most active August contract closing at $12.7440. Silver also closing lower on the day, but by about 8 cents at $16.65. Dollar in essence unchanged. Mixed bag in U.S. equities, with the Dow Jones Industrial closing at a new all-time record high, up about 10 points at 22,026. NASDAQ closing lower along with the S&P. So traders, even with a lower dollar today, gold is trading under pressure. As you can see, I've got a U.S. dollar chart up, daily chart, 92.67. In essence, fractionally lower on the day. You can see when we blow up this chart that we do have a lower close, but just by a couple of ticks. So not that much in terms of an effect. But the fact is, with a 22,000 Dow and the jobs report coming out tomorrow, at least in the futures market, there is absolutely a continuation of the downside pressure we have seen recently in gold, at least for the last 2 days. And although we have just 1 day to go until the end of the week, we can already see that this week's candle has turned red, slightly so, and is developing very much like either a doji or a hammer, depending on how the market washes out tomorrow. That, of course, will be the effect that tomorrow's jobs report has on current pricing. Trading volatility found within the market has certainly affected us today, as we pulled profits on our current long gold trade that we got in a couple of weeks ago. If you recall, we entered the market roughly at 12.32. That would be right in this area here. We had stops that were below that, but as this market began to rally, on a couple of occasions, I believe we had a total of 3 times that we actually went and raised our stops. The last stop that we implemented was to put our stop just below 12.65. That, of course, is vis-a-vis the October contract, which is what we are currently looking at. And last night's activity took the market well below that particular price point, as we saw 12.59 being the low reached in October gold futures. Therefore, we got in at 12.32. Even if we mark ourselves out at 12.64, we netted a profit, and the profit that we netted was $32 or $3,200 per contract. We pulled profits yesterday in our silver trade, 2,300 plus. So the total of the gold and silver trade has amounted to a profit of just above $5,000 for one contract of gold and one contract of silver on this particular trade. I believe that we were able to get a good profit out of the trade, and we will go into tomorrow's jobs report flat with no active trades, and I feel pretty good about that. So in terms of the recent weakness that we have seen in gold pricing, although fairly mild, where could we expect this market to go if we go into any kind of realistic correction? And to that end, I have created a basic fib retracement of this most recent rally, which begins roughly at 12.04 and concludes at the top here at 12.80. When we do that, we get our different levels. And most interesting is the fact that the low, and this of course is most active August contract, the low at 12.62 also corresponds pretty much to the letter with a 23% retracement of this rally. The 38% retracement level takes us to 12.51, and a 50% retracement takes us to about 12.42. Therefore, if we do see any kind of real corrective action in this market, we'll probably see gold prices trade as low as $12.51. Of course, $12.33 would actually be the 61.8% retracement, but I don't think we would see a correction of that magnitude. However, anything is possible. The other alternative is that the jobs report will be favorable to gold traders, meaning bullish for gold, and this particular low that was achieved today would serve as the low for a dip in the market and not necessarily a correction. That being said, my recommendation is obviously we just pulled profits on silver yesterday. We pulled profits on our gold trade today, is to go into tomorrow's jobs report flat with no active trades and banking the profits that we have taken. So traders, while we have seen a mixed bag in U.S. equities with the NASDAQ composite trading lower today, S&P also trading lower, the same cannot be said for the runaway Dow, which broke over 22,000 this week and is now trading at 22,026, absolutely an all-time record high. Now, in terms of attempting to analyze where this market could go to, we really need to do what is called a Fibonacci extension. And traders, I've gone ahead and created a long-term Fib extension for the Dow. In essence, what we are doing is we are starting at really the beginning of this long expressed rally back after the crash of 2008. We can see that right here. The market comes down and hits these lows beginning of 2009, and that is our starting point here. We then plot this market all the way up to this peak that came in roughly mid 215, and these bottoms that we got following that, that's the deepest of corrections that we really got. We had one right here, but I'm not counting that, and then we extend that from there. That being said, a 61.8% extension of that move takes us to 22,629, and that, traders, is where I believe the Dow could head to before having a major correction. So traders, as we spoke about in the chart section of today's reports, we did in fact pull profits. We did in fact get stopped out of our long October gold trade. Profits, I believe, were highly respectable at about $3,200 per contract. Add that to the $2,300 that we pulled off of silver, and we've pulled about $5,000 worth of profit off of a position in gold and a position in silver. Now, the market is higher than we sold out at, and I did talk about this the other day, but it's worth repeating. It's a story about Herbert Hoyle, one of the most famous stock traders of the 1950s, and when he was interviewed, he was asked the following question: why do you have such success when other traders simply lose money on a consistent basis? His answer was simple: I always sell too soon. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.